Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about yesterday's move up in technology stock, today's record number of internship applications at Goldman Sachs, and tomorrow's investment advisory board meeting. But before we begin, as a reminder, this is a financial education presentation, should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Technology stocks screamed higher yesterday. Do you see this continuing?
Good morning, Allison. Thank you for that intro. And yesterday was kind of surprising, right? We had the, talk yesterday morning about Jamie Dimon and his forecast of, kind of gloom and doom, the confluence of inflation, still kind of recovering from COVID, and of course the sanctions / Russia-Ukraine conflict. So kind of dire words, and all of a sudden the NASDAQ just screams higher throughout the day. So let's go ahead and take a look at the NASDAQ. This is this morning. Obviously, the futures are down. I've got a 6-month chart in front of you. So the question is, where is technology going to go from here? Well, technology is one of those where you almost have to zoom out, and you'll hear me talk to, if you work with me on a daily basis and you're worried about something, generally I will say, hey, look at it through a couple lenses, right? Look at the short term, which is more trading based, and then zoom out, look at the long-term investing part of it, and you'll see a whole different story. So excuse me, when you look at the NASDAQ chart here, again, I have a 6-month chart. You can see where things were back in November, December, January, kind of, at the end of the year, things peaking pretty high there in technology from a huge run up. From there, we had an official entry into a bear market, so 20% off, and now we've retraced that. More than 10%, actually, up like 12% off the exact bottom. Sometimes things are obvious, sometimes they aren't. Okay, so this is not a crystal ball moment. Now, I will say, when you kind of rewind the clock back to this middle of March timeframe, when the market started moving higher, I did have one client and good friend reach out, and we were talking market stuff, and he said, "Do you see the market going higher from here?" And it's just like, oh yeah. Now it's easy to say that in hindsight, but no, I did say this at the time, and was, calling the fact that once you enter the bear market, the retracements has, been pretty quick. And I'll show you, well, let's just look at the 5-year chart, and it's a little easier to see what I'm talking about. So here, when you zoom out, that this is March 2020, we had the 35% plus sell-off here, and a huge retracement. Here we have the sell-off, and already retraced over half of that, long way from new highs, but retraced half of that. If you go all the way back to December of 18, we had a bear market right here. That was a 20% sell-off right there in 1 month, and it bounced pretty good from there. So things don't stay down long in the tech world. The money, I say money is like water all the time, and it, we think of it a glass of water, it flows out and then it comes flowing back in. So I think for those that were able to put money to work, new money to work here, or do some switches in their portfolio, to go back, getting crazy with the chart here. If you put money to work there, you've been rewarded. If this was your entry point, you still have to be patient. You're in good names, but you're probably not back to even in those names. But when you see the longer term story of technology, it's going to give you the best returns, the highest margins, the most pricing power during an inflationary environment to be able to turn around and, pass the costs on to their customers. So it's still the place to be. I can't guarantee it's going to go up tomorrow or the next day, but I think over time it's almost assuredly changing the world. Companies are going to drive the market higher there.
Next, Goldman Sachs CEO David Solomon announced this morning that his company has received a record number of internship applications. Is this a good sign for GS stock?
Well, this is kind of crazy. So you can see David Solomon there pictured, and I mentioned earlier to Allison, she's like, I've heard that name, and it's just like, well, we talked about Jamie Dimon yesterday, who I would say, he's certainly the longest in the chair of the big financial CEOs, but David Solomon is unique. He's been around a long time, but also he moonlights as a DJ. And I think Allison thought I was kidding when I brought that up there, but he's DJ D-Sol, and actually, performs at like huge nightclubs and stuff. So even though he's a CEO of a major bank, you can still have your side gig. So all of the, for all the crew out there that has a dream on the side, don't forget to live your dream. He is a perfect example of it. I don't know his age, but certainly an older gentleman, if you will, and wants to be a DJ and becomes a DJ. right? Later in life. Good for him. But back to the point at hand. So 236,000 people apply for Goldman Sachs internships. And you see at the bottom there, if you can see that, acceptance rate is just 1.5%. So quick math tells me that's what, right around 3,000, maybe 3,100 positions that they're all vying for. But obviously that's a great sign. Financial world, I do think attracts, bright young minds, if you will, because of the, potential upside for making money. If you're good at making money for others, you can make a lot of money for yourself. That is a fact. So it's refreshing to see the interest in the finance industry. I do hope, since, I started this business based off of kind of rebelling against what I call big box finance, which is the we're smart, you're dumb, just give us your money and don't call us, mentality. I don't think that's it at all. I think people actually enjoy being a little bit more involved in their investing, or at least have a little understanding about what's going on versus just a complete hands off. So, who knows? There was a video though out that, if you remember this, I don't think I ever saw it. It was a slide deck by Goldman Sachs junior bankers detailing harsh working conditions. So there's been, Boiler Room was a movie that came out. You've seen some finance movies, and I think those are probably sensationalized to some extent. But if there, of course, has to be some truth to that, otherwise they wouldn't make the movie about it, right? So overall for the stock, so I think, Goldman Sachs, I talked about JP Morgan yesterday, and I was like, yeah, you can buy it here. They're nice and cheap. Goldman Sachs is also cheap. We'll look specifically. Just hit a 6-month chart here. You can see it's been kind of beaten up. So yeah, PE of 5. Okay, that's cheap by any definition. And, 2.4%. And, in theory, the financials do well under a rising interest rate environment, right? That drives up net interest margin, drives up bank profits. I think people are concerned right now for, especially, when Jamie Dimon's talking about the economic sanctions, spilling over into the U.S. It's hard for us to know exactly who has the most exposure to the economic sanctions, through exposure to Europe, through exposure to Russia itself, and having to maybe write off some losses as they have to cut ties. A lot of that is unknown, but so people aren't necessarily rushing money into the finance world. I still like JP Morgan better than Goldman. I like the two ways to win. JP Morgan has the investment banking side. They also have the commercial banking through Chase, which obviously crushes you with ads no matter what you watch. There's a Chase commercial. So, and all your, get $500 in the mailers. I don't know, I get like 3 of those a week. But anyhow, the overall, I think you could put money to work in Goldman Sachs, but I think JP Morgan is still a better stock.
Last, the Ankerstar Wealth Investment Advisory Board meeting is tomorrow night at 7:30 p.m. Central Standard Time. Can you tell folks what to expect?
Well, sure. Here's the, here's the slide, if you will, for the information. So this is the third one of these that we've done. So if you kind of rewind the clock for Ankerstar Wealth, we had the name change last year from Afterburner Financial to Ankerstar Wealth to a little more formalized and make it, excuse me, give it a little more longer term structure. We hired a full-time operations officer with Candace that I know many of you have talked to and or personally know. We again, junior advisor, another intern through Allison. So really building the team here, and it's making a huge difference as far as the company growing. Not just growing in assets under management, that's taking place, of course. Even in a challenging environment of January and February, we were able to grow. But growing as we mature the process and we're able to onboard more clients and get things ready to build out into go into a hard location next year. Probably later in the year. But what the investment advisory board does, and again, we're a little early on, but it's my opportunity to sit down with the investment advisory board, which is 3, soon to be 4 folks, and kind of talk about ideas and then present them. Right now, obviously, I'm the heavy driver of that process. I think that will mature over time as well. But tomorrow night at 7:30 Eastern, it's a Zoom. Feel free to come out. You'll see an invite officially from Candace later today with the Zoom link and everything. But it's really for you to listen. You can ask questions if you want. I get it if you don't. But certainly it's open, and eventually people will be in the chat throwing spears at investments, which is good. That's the healthy part. If I'm saying something and you're like, whoa, I think that's crazy. Hey, human up, put it in the chat, right? Let's have a little conversation versus me just sitting there kind of waxing prophetically about the book. But I'll talk about the assets under management. I will talk about what we're invested in, the top 10 holdings and why. Talk about investment themes that are working, that aren't working, and there's some that are not. Talk about some high risk opportunities out there. Talk about private equity opportunities, and then give my forecast. I'll give one review of the last quarter. The first quarter, I'll forecast the next quarter, and then the year, then 1 to 3 years, then 2 to 5 years. So you get to hear all of that within about a 30-minute presentation. Then I open it up for questions. So if you have questions, please, you can submit those early as today, and then I can, address them, or you can just ask them real time. But I'd love to have you guys out. I think it's a good way to learn about what's going on, and over time provides everybody the opportunity for a one-on-one time with me, not one-on-one, but group on one time with me to be able to ask questions and have me respond to you directly.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.